Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Trump's 100 days. The U.S. president marks the second-term milestone at a rally where he renewed criticism of Fed Chair Jerome Powell and touted his economic policies and tariffs, doubling down on China. Emirates expansion. The CEO of the world's largest international airline says they are negotiating to order more aircraft to upgrade and expand the fleet. My interview with Sheikh Ahmed bin Saeed and Maktoum is just ahead. And we're looking ahead to this week's Magnificent 7 earnings reports and what could be the next big catalyst for market moves. Well, it's just gone 8 a.m. across the Emirates. I'm Researc in Dubai. 100 days of President Trump's second term. So we're going to take a look back at how assets have performed. He used the opportunity yesterday to address a crowd in Michigan where he spoke about China deserving the steep tariffs that they have imposed. He also went forward with those auto tariff exemptions that we discussed yesterday on the show. So some carve-outs being applied to certain auto parts that are imported. Then he also took the opportunity to renew his criticism of Fed Chair Jerome Powell. So we're back talking about that again. So this has been the reaction in markets today so far. S&P futures down 0.5%, NASDAQ down 0.6%. This despite the fact yesterday that we had a better end to the session. For the month, though, I would just say that the S&P is up 0.6%. Sorry, it's still down 0.9% for the month. NASDAQ is up 0.9% for the month. So inverse there. And I would also just flag that NASDAQ is very close to levels that we were at before April 2nd, that big announcement. So we've almost fully erased the losses post the tariff washout. 10-year yields continue their march lower. We're sitting at 4.16. We've actually covered about 15 basis points in 2 days. About 100 basis points of rate cuts are priced into the curve. And then Brent, another drop today, down 0.9%. Once again, concerns about the shape of the global economy. For the month of April, the energy index, energy sector, I should say, is down about 15%. So we've seen a notable decline in where energy and specifically oil prices have been trading over the course of the last few weeks. Flipping over, let's just take a look at the key metrics of President Trump's first 100 days in office and how some of these major assets have performed. All of them negative, basically. S&P down 7%, Bitcoin down 9%. Remember, crypto community were very excited about the arrival of President Trump. The USD lost a lot of its value, as we've talked about. Brent also down 22% on the year. This is WTI. And then 10-year yields actually lower now, 46 basis points lower. So that's a look back at performance since inauguration. Let's switch on, though, and talk about China markets today. Avril Hong is in our Singapore studio, and we had those PMI manufacturing numbers come through. Everyone was waiting to see what the number was going to look like because it's the first piece of data that we're going to get out of China given the new tariffs.
Yeah, so we were searching for clues on how exactly China has been hit from these tariffs. China's factory activity not only slipped and missed the mark, it's the worst contraction since December 2023. So they are being very hard hit. But it's not just what we're seeing on the economic front, the data there. It's also flowing into Chinese corporates because the mega banks, they're also showing a lot of pressure on their margins, on their profits. And that is all turning into talk about the need for stimulus. And we are also seeing, I think, though Chinese currency for the moment sitting pretty flat against the greenback, it's interesting. Maybe part of it, the expectation of stimulus is helping the Hang Seng to reverse from earlier losses, but partially also to do with the Chinese president visiting Shanghai, talking up the importance of AI. So tech is kind of outperforming today, although not very convincing, all things considered. Also just flagging when it comes to the region's benchmark, it's actually reversed from the losses post-Liberation Day. So we're sitting at the highest since late March, Joanna.
Avril, thank you so much. That was Avril Hong in Singapore. Now, President Trump has talked up his economic policies and tariff regime during an event near Detroit to mark his 100th day in office. Trump had also told ABC that China deserves the tariffs he's imposed on their exports.
China probably will eat those tariffs, but at 145, they basically can't do much business with the United States. And they were making from us $1 trillion a year. They were ripping us off like nobody's ever ripped us off.
For more, let's bring in Bloomberg senior editor Bill Ferries. Bill, good to have you with us. Let's just maybe recap some of the comments out of President Trump yesterday, because the markets assumed that maybe things were going to start to thaw between the U.S. and China, but he's come out swinging again, essentially saying that China deserved the steep tariffs that they've imposed and that he expects China to eat the tariffs. How is that going to go down with Chinese authorities?
Well, I think, we're seeing a continuation of this real standoff between the U.S. and China over essentially who's going to blink first on this tariff war. The U.S. administration clearly wants China to kind of come to the table to make a call. China's saying or signaling that it can sort of withstand what it's dealing with so far, and that it's going to hold out. So there's really no sign of much of a reprieve here when it comes to the dispute between these two countries. We have seen Donald Trump try to give a little bit of relief to some sectors, including the automakers. But really, the China trade issue is huge. And I think until we start to see it filter through to some of that key economic data, either on the Chinese side or on the U.S. side, I think both sides are going to try to stand their ground.
Yeah, and he also used the opportunity to once again criticize the Fed Chair Jerome Powell, saying that he knows a lot more about rates than the chairman of the Federal Reserve. And again, this marks a bit of a U-turn because a few days prior, it seemed as though he had moved on from calling for perhaps the explicit removal of the Fed Chair.
Yeah, I don't think he said Jay Powell's name directly in that speech in Michigan. He just talked about the person at the Fed, but we all know who he's talking about. I think Trump is never going to totally abandon his criticism of the Fed until he sees rates heading in the direction that he wants them to go. He's made the case that he thinks the Fed has been too slow to reduce rates, comparing them to the central bank in Europe, for instance. And I think knowing that there's a potential hit to U.S. economic growth this year, if this tariff war continues, he wants to see the bump that typically comes from a Fed rate reduction sooner rather than later. And I think that's going to be something he continues to hit on in the months ahead.
Yeah, well, with 100 basis points of rate cuts priced in, the markets want to see interest rate cuts as well. Bloomberg's Bill Ferries, thank you so much. Well, joining us now is Katrina Ell, Director of Economic Research at Moody's Analytics. Katrina, really good to have you on the show with us. Maybe let's just start with the China PMI manufacturing number that came out this morning. We were speaking about it with Avril a short while ago, coming in lower than expectations, actually the lowest number since December 2023. What's your take on the data?
So this data was hotly anticipated because it is our first real look at just how affected China's manufacturing and export sector has been with this tariff chaos that the global economy has been dealing with. And unfortunately, it did come in weaker than expected. But I think what we saw is deterioration across all the subcategories of the manufacturing PMI. But we saw that particular weakness come through in that forward-looking new export orders series. So we saw a 4.3 point deterioration down to 44.7. Now that's a very weak number, and it does go to show just how much pain China's economy is experiencing. But I think, what hasn't got as much attention is the fact that the non-manufacturing PMI, which was released at the same time for April, also saw deterioration. Now that's a really good barometer of what's happening with domestic demand in a timely way in China. And unfortunately, the results there are quite soft too. And it's particularly concerning given that we've been talking about stimulus being unleashed in China for quite some time, but we're still seeing that domestic demand unfortunately lag behind.
Yeah, interesting. So both on services and manufacturing. And so it begs the question, why do Chinese policymakers feel that they can also come out swinging versus the tariffs? And if you look at the commentary, many of our colleagues having been calling out some of the op-eds that have been written in China journals, newsletters, newspapers, their approach is very much that we're not going to be bullied. And if we have to match, then we will match. So what is giving them the confidence to do that, given that the data has started to disappoint meaningfully to the downside?
I mean, I think what is drawing policymakers in China is the fact that they, by standing up to Trump and it puts some sort of stopgap on the aggressiveness that he is sprouting. And I think we also need to remember that the US economy is actually hurting under this chaotic policy as well. And so that's got to be some confidence, at least, to Chinese policymakers that this level of aggression can't continue from the US side. I mean, we saw earlier today that the US Conference Board consumer confidence data for the US dropped to a 5-year low. Now, we know that there can be a difference between how US consumers feel and how they actually act, but that weakness is palatable and does go to show that this negative and pervasive uncertainty that the US economy is dealing with will have consequences.
And for the broader Asia-Pacific region as a whole, I thought the IMF latest round of forecasts were quite interesting because they downgraded China by 0.5%. But for the region, it was even sharper. It was a downgrade of minus 0.7%. So the region also is bearing the brunt of the tariffs introduced by the Trump administration.
Oh, definitely. I mean, we need to remember, Southeast Asia in particular is incredibly export-oriented. They drive so much of their economic performance from foreign demand. We know Southeast Asia is particularly good at producing manufactured goods that the global economy demands. But unfortunately, because we're looking at weaker global demand this year, what we're seeing right across Asia, unfortunately, is a weaker performance. It's not just China that is caught up in this weaker global demand picture. It is, unfortunately, Asia right across the board. And we're seeing particular deterioration in GDP performance for those economies that don't have that domestic demand buffer as much. So thinking here in particular places like Singapore and Taiwan, which are even more acutely exposed to weakness offshore.
Katrina Ell, thank you so much. Director of Economic Research at Moody's Analytics. Always good to have you on the show. Coming up, we hear from the Emirates chairman and CEO on plane deliveries and the impact of tariffs. That conversation coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Dubai. The world's largest international airline says it is in negotiations to order more jets to upgrade and expand its fleet of long-distance aircraft. Emirates chairman and CEO Sheikh Ahmed bin Saeed Al Maktoum told me more about their plans to expand the carrier's global reach.
Still with the delay on the Boeing, of course, I'm optimistic that Boeing will be able to deliver in about a year plus from now. So it's more likely will be in the 26th year. So that's the date that we are supposed to receive our first 777X.
Are you having any conversations with Rolls-Royce about the status of this engine?
We do have with all the engine manufacturers and also the manufacturers when it comes to airframes.
And then now you have the additional complication of tariffs being imposed as well. Is that likely to contribute even further to these delivery delays? How do you think about the impact it may have?
I hope the tariff will not affect, it's a bit early for us to decide today if the tariff will really affect the end of, on the delivery dates of those aircraft.
What do you think about the fact that there are more competitors coming into the space in the region? You have Turkish Airlines beefing up their fleet, obviously Riyadh Air is looking to take to the skies later this year.
We live in a world, it is a very competitive world. We are based in Dubai. Dubai is a very competitive market. I'm not talking only in the aviation sector, but altogether. We lived this for 40 years since the start of Emirates in 1985. So I think when people talk about the region or what's happening, or if it is in Turkey or any other places, we have to compete. I think competition is good. I'm not really worried that much because we do have an excellent product, and we all the time maintaining that product and trying to enhance this product year on year to be able to keep our passenger flying.
So essentially it's about competing on the product as opposed to competing on price. I'm just wondering if it may lead to lower ticket prices for everybody.
You know, when it comes to price, you know, I mean, we will price always, there is cost plus, you know, and I think if some people, they're expecting Emirates to just drop their price for no reason. We cannot afford it. We have to place it on the product that we offer and our costs.
Let me just ask you, because we've talked about your growth expansion plans, we've talked about the delivery delays, and you've mentioned some of the jets that are going to be delivered. But when you think about your overall fleet, what do you think is missing?
You know, of course, we will always, as you know, we still have nearly more than 300 aircraft to be delivered or on order. Of course, some of those aircraft will be a replacement of the existing, and some are extra. But we are not stopping there. We are also in negotiation to see maybe we'll be able to sign up for more aircraft. I won't be able to tell you today at which manufacturer, but this is something which we are negotiating.
Okay. One of the questions that people have been asking, and we had the same conversation 1 year ago, is about what happens after Tim Clark. So do we have a timing, an updated timing on when he's going to be stepping down?
I leave it for that time.
Okay. Can you give us any color on who may be looking to succeed him?
It is the same thing, I think, when it comes to Emirates, you know. I have a good line of people. They are there. They are good. They've been trained very well, and not only on the top, on the high side of the management, but on all levels of. I think the HR are doing a great job also at Emirates.
Emirates Chairman Sheikh Ahmed bin Saeed Al Maktoum speaking to me yesterday. Well, coming up, a big week for big tech earnings. Meta and Microsoft are due to report after the bell today. We'll look ahead at what to expect. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johannesburg in Dubai. Goldman Sachs CEO David Solomon says he is expecting markets to settle down after experiencing wild swings in the first 100 days of President Trump's second term. Speaking exclusively to Bloomberg's Francine Lacroix, Solomon also told us he's awaiting more clarity on the direction of the president's policies.
We're 100 days in, and I would say there are a handful of policy initiatives that are being put forward. Some of them certainly are very, very interesting and intriguing to the market, but what's been put forward on trade so far has raised the level of uncertainty very significantly. And so I'd say 100 days in, we need another 100 days to kind of see where the policy directives are going and to try to have a better understanding of how what's talked about so far, particularly with respect to trade, is ultimately going to be put in place, how it's going to play out. But the policy actions to date have raised the level of uncertainty to a degree that I don't think is healthy for investment and growth. And I think it's going to be important that we get more clarity on the direction of travel from here.
What, for the markets? So if you look at markets, there's been a sell-off, a pretty dramatic sell-off in U.S. assets. It's somewhat come back, but has it been too drastic?
Well, it's not just for the markets. You know, first and foremost, it's for businesses, it's for individuals. When there's a high level of uncertainty, people tighten their belt, they invest less, they spend less, and all those things slow down growth. And so, you know, one of the things that has happened over the course of the first 100 days is that the perspective on forward growth has been decreased. And so when you decrease that perspective on forward growth, that changes investors' perspective of equity values. So what we've seen is a relatively orderly kind of repricing of equity assets. And what's unusual in the context of this repricing is generally when you have that kind of equity market stress, people run to treasuries or safe haven, but here we're seeing a slightly different rotation because of the nature of the policy. We've seen a weakening of the dollar, at the margin, and so that's been different than I think what people expected.
Well, are treasuries still a safe haven?
I think U.S. Treasuries absolutely are a safe haven, but you can reprice a safe haven asset as people's preferences shift slightly. I think at the margin, we've had for a long period of time a trend of capital flows into U.S. assets. And, at the margin, people are looking at their portfolio constructions and saying, given the uncertainty that's been raised in the U.S., do we want to rebalance that a little bit? And I'd say the rebalancing so far has been at the margin. Investors can rebalance their portfolio in two different ways. If you're over here in Europe and you have a European investor, they can sell U.S. assets, but also if the relationship between the dollar and the euro changes, that rebalances their portfolio weighting too. And so we've seen that over the course of the last few weeks.
Goldman Sachs CEO David Solomon speaking exclusively with our colleague Francine Lacroix. Now, Bloomberg has learned that President Vladimir Putin is insisting that Russia take control of 4 regions of Ukraine it doesn't fully occupy as part of any agreement to end the war. The demand deals a blow to President Trump's efforts to reach a ceasefire. And sources in Moscow say U.S. envoy Steve Witkoff tried during lengthy talks last week to convince Putin to agree to a ceasefire based on the current front lines. We are also just getting some breaking news now. The results from Societe Generale have just come through. So the numbers are the first quarter net income beating versus expectations, 1.61 billion euros versus estimates of 1.22 billion euros. On the operating expenses, they have come in slightly lower than the estimate at 4.6 billion versus estimates of 4.62 billion. The CET1 ratio, 13.4% versus 13.3%. Equities revenue, a good quarter, just like all of the other banks that have been reporting, coming in at 1.06 billion, higher than the estimates of 920. And then FIC sales and trading also. This one is interesting because it's actually a slight miss. They've come in at 698 million versus estimates of 735 million. So a small miss on FIC. But overall, the net income figure for Societe Generale is a beat, 1.61 billion versus estimates of 1.22 billion. All right, coming up, we speak to the CEO of Iraqi telecoms provider IQ Group, Asoz Rashid, about the nation's tech ambitions. That's next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Trump's 100 days. The U.S. president marks the second-term milestone at a rally where he renewed criticism of Fed Chair Jerome Powell and touted his economic policies and tariffs, doubling down on China. Emirates expansion. The CEO of the world's largest international airline says they are negotiating to order more aircraft to upgrade and expand the fleet. My interview with Sheikh Ahmed bin Saeed and Maktoum is up online. And we're looking ahead to this week's Magnificent 7 earnings reports and what could be the next catalyst for big market moves. It's just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Dubai. So 100 days of President Trump. He used the opportunity yesterday at a rally in Michigan to talk about some of his, what he says are economic successes. Also taking aim once again at China, saying that they deserve the steep tariffs that the U.S. has imposed. But then also signing that executive order with some of the tariff exemptions applied on auto imports. So that was met with, I guess, partial positivity out of the auto space at least. Today, what you're seeing behind me is some negativity transpiring for both the S&P and NASDAQ. Remember, today is going to be a big day in terms of earnings. You've got both Meta and Microsoft reporting. We'll get to that in just a moment. And one chart that Valerie, and we're speaking to her in a few moments, flagged this morning is that the NASDAQ is basically back to where we were, just a smidge below that April 2 tariff announcement. So we've almost fully recovered all of the losses sustained throughout the month of April. interesting stat there. 10-year yields down to 4.17 today, so that March lower continues. We're about 15 basis points lower over the course of the last couple of trading days. And then Brent, it is not pretty this morning. Energy is down 1.2%, down 15% for the month of April, and I believe this is the worst month of April on record for the energy complex. So think about that as we head into more uncertainty about the status of global demand. Switching over, though, I thought it would be interesting just to take a look back at how some key metrics have fared in President Trump's first 100 days. S&P lower, Bitcoin also lower as well. Crypto enthusiasts perhaps a little bit disappointed. The dollar, we've spoken about this a lot the last month or so, has lost a lot of its shine, down 7%. WTI down 22% in the first 100 days. But 10-year yields are about 46 basis points lower as the market is accounting for now a steeper interest rate cutting cycle with 100 basis points priced in this year. Okay, let's pivot to Asia and talk about how some of these key markets are faring. Avril Hong is in our Singapore studio. And of course, we spoke about this earlier, but all eyes really on that disappointing China PMI manufacturing number that came through today.
Yeah, it was a massive miss when you look at the official factory activity indicator, and it was the worst contraction since December 2023. And all this, of course, amid the focus on how exactly China has been hit by the U.S. tariffs. So it's looking quite bad, worse than people had expected, economists, investors alike. And it's not just showing up in PMIs, it's also showing up in the scorecards, earnings-wise, right? Chief among them, the Chinese mega banks. It's eating into their profits, their margins as well. So perhaps unsurprising that when you look at the performance across markets today, there is particularly that stimulus expectation tone that maybe is filtering through, helping the Hang Seng to erase earlier losses. But it's also lifted by tech because of the Chinese president being in Shanghai and, that focus on AI build out amid some of these trade uncertainties. So that seems to be the focus for markets, but keep in mind as well that it's interesting. There seems to be further sense of de-escalation when it comes to the U.S. and China trade war. We're hearing from Reuters that China is carving out some exemptions when it comes to U.S. tariffs. The Asia stock gauge also at this point is at the highest level since late March. Jumana.
Avril, thank you so much. Avril Hong in Singapore. President Trump has praised Amazon founder Jeff Bezos, calling him a good guy. That's after the e-commerce giant said it would not display the cost of U.S. tariffs on products. The White House earlier blasted the reported move, and Trump called Bezos personally to complain. Amazon says the idea was never a consideration for the company's main website. And speaking of, it is a big week for big tech earnings. Meta and Microsoft are due to report after the bell today. AI costs and ad revenue will be the main focus amid global tariff uncertainty. And of course, Amazon and NVIDIA coming up as well in the next few days. Let's get more with Bloomberg's Valerie Teitel. Valerie, good to see you. Maybe let's just start with what's on deck for Microsoft. Clearly, their cloud computing business is going to be a focus for the investment community.
Yeah, that's right, Jumana. Cloud does make up a big portion of Microsoft's bottom line, so the guidance on their cloud business will be hotly watched. But what else will be also hotly watched is the big focus on their data center spending plans. We're going to be watching CapEx very closely for any glimpse of how long-term cloud and AI demand is holding up amidst this uncertainty. In recent months, Microsoft has walked away on discussions from leasing new servers and slowed construction on their previously owned servers. So we're watching CapEx closely for any more guides on whether that's being pulled back or are they still bullish on CapEx expected for next year. And as you mentioned, we'll also be watching the cloud business very closely. It makes up around 30% of their revenue, that cloud infrastructure business.
Yeah, data spending going to be key, obviously, after the arrival of DeepSeek earlier this year and the impact that could have on the hyperscalers. Val, let me also just ask you about Meta, too. Interesting statistic. The bulk of the revenue comes from advertising. It's something like north of 90%. So is that really going to be the focus today?
Yeah, 96% of Meta's revenue comes from advertising, and it is a very economically sensitive segment. Now, we'll be watching for how this ad revenue spending is holding up amidst all this economic uncertainty, amidst the global tariff uncertainty. Now, the earnings come from Meta a day after they unveiled a new standalone AI chatbot named Meta AI. It's built on the back of its own large language model and aimed to compete with ChatGPT. So investors will also be watching for CEO's Mark Zuckerberg's maybe vision for how this chatbot is going to add to Meta's bottom line. So watching ad revenue spending and any new news on this chatbot unveiled late last night.
Great stuff. Bloomberg's Valerie Teitel, thank you so much for the reporting. All right, let's pivot now and talk about tech ambitions in Iraq. Telecom provider IQ Group has developed a 3,500-kilometer fiber optic project as an alternative to the Red Sea route. The company says the network reduces latency and improves the reliability of internet traffic. Let's get more on this with the IQ Group CEO, Asoz Rashid. Really good to have you with us on the show. First of all, just tell me a little bit more about what IQ Group is looking to achieve.
Well, essentially, we've seen an over-reliance on the Suez Canal route. Through data between Europe and Asia. We've provided the first real alternative terrestrial route to that, and it lowers latency and actually acts as a further connection of the regions.
Okay, so then you're providing people with an alternative, or your clients with an alternative to the Red Sea route. How does it differ on pricing? Is there a price premium to the alternative?
Essentially, it's priced at market prices. So what we're essentially doing is we're not competing with the Silk Route, we're adding a viable alternative to the providers.
And how would you say the pricing competes versus the other competition that are around?
It all works on basically what route you take, but the pricings are similar. Obviously, terrestrial routes are easier to maintain, so we do have a slight advantage on that. And we're negotiating with all the hyperscalers because we're new to the market and everyone's testing us and pleasantly surprised.
Yeah. So let me just ask you a question about security, because obviously the technology is being put to use in Iraq. How much of a concern is the security situation? How do you bolster the channel's security to ensure a smooth transition?
That's a great question. To be honest, that is an albatross around Iraq's neck. Everybody's worried about security. But essentially, those who live in Iraq and work in Iraq, it's not an issue, it's a non-issue. The Iraqi government needs to really work on that and push the fact that it is safe. I mean, regionally, where we have been relatively safe, our networks are safe, and they're fully guarded by the Iraqi government on the oil pipelines. So,
have you had any disruption to your services?
Not major disruptions. I mean, we've had municipality works here and there, but that happens all over the world. But in terms of what sort of the outlook on Iraq's security and the reality, they're two completely differing worlds.
How do you see the tech sector sort of driving the future of Iraq's growth looking ahead? Because for so long, and it is still very much an oil-dependent economy, what opportunity is there for the tech space?
It is oil-dependent. The Iraqi government is making moves and is starting to think about diversifying. I'm glad to say that probably the Silk Route project is the first real project which has got nothing to do with natural resources. And it's raised a lot of ears and eyebrows within Iraq itself, because essentially the Silk Route is a corridor through Iraq. So what we want to do now as our next phase is to use that infrastructure for Iraq, not just the region. There is a huge potential for Iraq. It's a growing economy, it's a big population, and people are hungry for change and technology.
Yeah, no, I'm sure. When we talk about the region, clearly the price of oil is going to be a focus, and it's going to affect many oil exporters' finances. When it comes to a project like yours, how much is the funding correlated to the funding at a state level? In other words, where is the funding coming from?
It's all private funding.
Yeah.
So the state is not involved in funding.
And in an environment when oil prices are going down, the funding doesn't get impacted?
It doesn't get impacted. It's all self-funded. And in actual fact, it's good because we are self-sufficient. We don't. We can bulldoze ahead. And we're setting the precedence within Iraq as well, because everybody looks towards, oil-producing companies. They look towards the government for help. But in uncertain times, that's not necessarily the greatest outlook to have.
Yeah, and have you seen the product resonating with some customers in Asia as well? Because you talk about the Silk Route and connecting east to west.
Exactly. I mean, when we first started, everybody was quite dubious of a small Iraqi company taking on such an ambitious role. But now we're in talks with all the major hyperscalers, all the names that you mentioned, household names. They're either testing our route or we're signing up deals with them, and they're putting their data through Iraq. So we're quite proud of the project, and hopefully it's just step one.
Any partner names you can give us?
Not just yet.
Okay, fair enough. I thought I'd ask. It's a real pleasure to have you on the show today. Asoz Rashid, IQ Group CEO. Well, coming up, can Trump facilitate an end to the decades-long conflict between Congo and rebel fighters backed by Rwanda? We get the details about a meeting between the two nations next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johannesburg in Dubai. Well, we're going to continue with a string of earnings that are coming through from European banks. While earlier we broke Societe Generale, we're getting the numbers through from UBS now. So let me talk you through some of the highlights. First quarter net income has come in at $1.69 billion versus estimates of $1.35 billion. So we got quite a sizable beat on net income. Also on total revenue, first quarter total revenue $12.56 billion versus estimates of $11.9 billion. So top line and bottom line beats. In terms of individual segments, so we've got the wealth management pre-tax income coming in slightly below estimates at $1.36 billion versus estimates of $1.37 billion. The investment bank coming in at $722 million versus estimates of $632.7 million. So a beat on the investment bank. The wealth management coming pretty much in line. As for some of the commentary, interesting what they're saying about tariffs. So UBS is saying higher tariffs do cloud the interest rate outlook. And they're also guiding to the same capital return plan, keeping the 2026 capital return plan subject to capital rules, which, of course, are under discussion. So those are the highlights from UBS. It beats and on top and bottom line. Now, U.S. President Trump has said great news will soon emerge from Eastern DRC. That is after Rwanda and the DRC agreed to draft a peace agreement by Friday. The two nations held a meeting with U.S. Secretary of State Marco Rubio in Washington. And for more, Bloomberg's Ondiro Ganga joins us now from Kigali, Rwanda. Ondiro, how influential is the U.S. in the Great Lake region? And are we expecting this new round of peace talks to actually be successful?
Hi, Jumana. America is very influential, and their influence runs really deep. That's why, come the 2nd of May, we are likely to see a draft peace deal between these two countries where some of the conditionalities or some of the agreements in there will be ceasing supply of military weapons to some of these armed groups, without specifically mentioning M23, though Rwanda is being accused of supplying them with weapons, and also respecting territorial and sovereign integrity, a point of concern that DRC has raised. And these two ministers, while they were in Washington doing this press conference, you could smell the tension between the two countries. While the DRC foreign minister chose to call for seriousness, sincerity, and transparency for this deal to work, the Rwandan counterpart instead chose to thank President Donald Trump for injecting some form of seriousness into the conversations for a peace talk. And this comes barely a month after U.S. envoy to Africa, Mossad Bolos, visited the region. And while he was here, we posed a question to him during the press conference, asking him if the U.S. was really interested in peace peace in the region. And he brought up Alpha Mean, who had ceased operation in the eastern part of DRC due to conflict. And he said that such a big operation shutting down not only affects livelihoods, but also the economy. And barely 24 hours later, Alpha Mean, which operates the biggest tin mine in the region, or in the world rather, was back into operation. This just goes to tell you how deep American influence and also their interest is. And President Felix Tshisekedi chose to take advantage of that, offer them some of the critical minerals that DRC have in exchange for security. And even though U.S. will not offer military support, they're offering joint investment between the two countries. And this is such a good deal for both of them to pass.
And Andiro, there are peace agreements being brokered both in the U.S. and Qatar. How is this going to influence the political climate in DRC and the latest rounds of conflict?
Jumana, this is not the first time that these agreements are being brokered. This has happened 6 times before, and all of them have always fallen apart. So if this is to hold, then it's going to change the trajectory of this country. Politically, the fighting will cease. And if this happens, then one, it legitimizes the concerns that M23 have been raising, but also neutralizes the threat and terror that has been coming with the fighting that we've been seeing. This, in turn, affects the economy positively, because when there's a cessation of fighting, then it just means that there's productivity, there's investment coming into the country, and also it will legitimize some of the operations in the region, because if you have foreign companies investing in the region, then their minerals can go into the global market, because for a long time they had been tainted with allegations of being blood minerals. Also, the government will have a little bit more money to spare, because a large chunk of their budget goes into fighting. We'll also begin to see a gradual withdrawal of peacekeeping troops in the region, but also President Felix Tshisekedi will now be on the spotlight, because if there's no fighting, he has to deliver to the people of DRC.
Bloomberg's Andiro Ganga in Kigali, Rwanda. Thank you so much for the reporting today. Now, coming up, President Trump marks his 100th day on office. We'll assess the impact of his economic policies amid the tariff uncertainty next. This is Bloomberg.
Everybody is discussing the impact that tariffs might have. At the moment, we don't see any hard evidence of that playing through.
As of now, we technically don't see any significant or relevant impact. I mean, we are in a region that is not facing, right, the challenges that other regions are facing.
So even if demands go down, we're still covered, because we are not able to meet the demand that we have today.
I don't see any pattern of people not flying or booking earlier or canceling. That's not happening. So this is why I see, and you can look at our flight or going to the US or leaving there, you will see them all full.
The good thing, trade will not disappear overnight. And the good thing about our business, our cargo business, we have long-term partnership with major companies worldwide. And we have agreed rates and prices with them.
But again, we know those things can change in a heartbeat, so it's on the risk register.
Airline chief executive speaking to us about President Trump's tariffs and the outlook for travel demand. Now, at a rally in Michigan to mark his 100th day in office this week, Trump championed his economic policies and renewed criticism of the Fed Chair Jerome Powell. Let's get more with Bloomberg's Charlie Wells. Well, Charlie, maybe unpack or try to unpack Trump's speech in Michigan. What does it tell us about at least how he thinks his first 100 days in office have gone?
Jumana, this was a classic Trump speech in that it was effectively a campaign rally. It really felt like that. And it was incredibly defensive. And this is a posture that Trump tends to make in a lot of these speeches. And the numbers stacking against Trump and the administration are not great so far. Consumer confidence, we know, is at near a 5-year low. Poll numbers, at least as of his first 100 days in office, are low as well. And so this was Trump trying to defend his record, but also foreshadowing a lot of the battles ahead, because we know that this administration has dealt with something of a sequencing issue, right? We know they wanted to address trade. We know they want to address taxes. They've had to do trade first, which is more difficult. Tax is coming, but the president did indicate that he's ready for a fight on taxes as well. He talked about potential Republican detractors and encouraged them to stay in line. So definitely a foreshadowing of what's to come here as well.
And in what ways is Trump's second term, so Trump 2.0 as some people call it, how is it different from Trump's first term or Trump 1.0?
Jumana, I think this has been one of the most revealing kind of facets coming from this second term, is that the rule book that the Trump administration is playing by is very different. I think a lot of executives, even a lot of voters, thought that they could engage with the Trump administration in almost the same way as they did starting in that first term, but it's different, right? It's been very different. You know, some of the things that he's been saying, he's actually meaning this time. I think some of the incentives are different for this administration. You know, the 22nd Amendment limits the president to 2 terms. We know we've got midterms coming up. And so there's a little bit of a divide between, say, Trump and the rest of the Republican Party, which is changing the shape of this administration.
Yeah, and one other thing that people point out is the fact that this time he may be more focused on his legacy as opposed to what he can get done in the next year and a half or so before the midterms. Charlie, thank you so much. Always good to hear from you. Okay, let's take a look at how some of these markets are faring, because equity futures are dipping towards the red today. S&P futures down 0.4%, but don't let that fool you. S&P has advanced for 8 days in a row now, and we're actually almost tracking gains for the month for the S&P. Keep an eye out on some of those big tech earnings later, Microsoft and Meta, that will influence the Nasdaq. But that is it for our show. Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Stay with us for Daybreak Europe.